Hi everyone, I'm Aura Ogorian with ACap Advisors and Accountants, and welcome to another edition of the ACap Recap, where we go behind the blog and answer some of your most important questions. Today, we're going to talk about the different types of 1099s that you may receive early in the year and what you have to do with them when it comes to your taxes. But before we begin, remember to subscribe, like, and share our channel. And if there's a topic that you want us to cover, be sure to include it in the comment section below or send us a message and we will cover it in a future webinar. The three common types of 1099s you might receive are a 1099 INT, a 1099 DIV, and a 1099B. So let's go through each one of them. The 1099 INT is issued when you receive interest income. So let's assume you have a bank account and you receive interest throughout the year, or a savings account. You're going to get a 1099 INT at the end of the year that's going to show how much interest you receive, and you have to report that on your tax return. The 1099 DIV is to report any dividend income you receive during the year. And that's going to be split up between qualified dividends and non-qualified dividends. And if you're interested in learning more about the difference between qualified and non-qualified dividends, check out my other video I did where I talk about the difference between qualified and non-qualified dividends. The other 1099 that you might receive is a 1099B. That's to report any stock sales that you've had, or commodities, or options contracts that you might have sold during the year. Most of the time, you'll see all three of these combined into one statement called a consolidated 1099 issued by your brokerage account, such as Charles Schwab or Fidelity or TD Ameritrade. Another type of 1099 that you may see is a 1099R. A 1099R is issued when you have distributions from an annuity, an IRA, a pension plan, or any type of retirement account, including an insurance contract. Most of the time you'll see this if you do a backdoor Roth IRA, you'll get a 1099R, or if you have money that's withdrawn from an inherited IRA, you'll see a 1099R. But most of the time a 1099R is issued if you have any kind of withdrawals from a retirement account. Another type of 1099 you may encounter is a 1099S. That is used if you have the sale of real estate. So if you've sold any real estate during the year, the brokerage house or the escrow company is most likely going to issue you a 1099S that's going to show the date of the sale, how much proceeds you received from the sale, the address of the property, and if there was any real estate taxes paid during the closing of the property. Another type of 1099 you may encounter is a 1099G. The 1099G is issued by governments if there's any government payments, such as state or local tax refunds, unemployment benefits, or any taxable grants. Most people get this if they have a state refund, and they'll get a 1099G, and they're supposed to report that 1099G on their tax return to see if any portion of that's going to be taxable. Another very common type of 1099 is either the 1099 miscellaneous, MISC, or the 1099 NEC, which is relatively new. These types of 1099s are issued for non-employee compensation, which are common for the gig economy, people who are contractors, independent consultants, but they're also used for payments of rental income or royalties or any type of compensation like that that's non-wage related. If you receive a 1099 miscellaneous or a 1099 NEC, most likely you're going to have to file what's called a Schedule C on your tax return and pay self-employment tax, or file a Schedule E on your tax return for any rental property income or royalty income. Now let's talk about some of the least common 1099s you might receive. One of them is a 1099-C. The 1099-C is used to issue when there's a cancellation of debt. So for example, let's assume that you owed a bank $100,000 and they decided they want to cancel that debt. That bank is going to issue you a 1099-C of $100,000, and that amount's going to be taxable to you because it's no longer payable by you. Another least common 1099 you might receive is a 1099-SA, where it reports any distributions from a health savings account. Another least common or less common 1099 you might see is a 1099-K. And a 1099K is used to report any transactions that you may have online and are paid with a credit card. So let's assume you sell something on eBay and people pay you with a credit card and you receive money that way. eBay is going to issue you a 1099K that's going to show all the credit card payments that you received through their online portal. And then the last one that we want to cover is a 1099Q, and that is to report any distributions from a 529 plan or a qualified tuition plan or a Coverdell Education plan. If you have one of those plans and you have money withdrawn from it to pay for education, you should receive a 1099Q, and that's going to be reported on your tax return.